Willkommen zum aktuellen Goldinvest-Interview. Lithiumgesellschaften haben es bei Anlegern derzeit nicht leicht. Prospect Resources aber, mit ihrem riesigen Arcadia-Projekt, stemmen sich dem Trend zuletzt entgegen. Wir sprechen mit Managing Director Sam Hosack und lassen uns die jüngsten bedeutenden Neuigkeiten genauer erklären. Sam, good talking to you. As we did not speak before, please give us some background about yourself.
Thank you, Bjorn. So, my name is Sam Hosack. I'm the Managing Director of Prospect Resources. I've spent my career in the mining sector, and I'm spent the majority of that time with First Quantum Minerals, which is a large copper mine. So First Quantum Minerals is globally dispersed, and over the 12 years that I worked for them, I was able to work in 6 countries, and a lot of that was whilst being based in Perth in Western Australia. So I've had a range of exposure to mining development projects, from small project expansions within a brownfield situation to large multi-billion-dollar greenfield projects. The last project that I completed with First Quantum Minerals, I was the project manager for the power station and port facility in Panama, and that had a capital budget of around $1.4 billion and took about 5 years to complete. So I've had a range of experience that is very well suited to Prospect Resources. I am a Zimbabwean by birth. I spent most of my life and career globally spread out, but I am very much intimate with the African, shall we say, contingent or exposure, and spent quite a bit of my time during the First Quantum period in Zambia, which is next door to Zimbabwe. So my experience in Zimbabwe is really a function of the experience that I've had around the region, and certainly feel comfortable with the jurisdiction, with the mining law, and we bring that type of experience to Prospect Resources. It's been a great empowerment.
Okay, thank you very much. It's good to know you know your way around the country. That leads us, of course, to Prospect Resources itself. Please give us an overview what the company is about. What is the Arcadia project and what sets it apart from other lithium projects?
Sure. Prospect Resources is fundamentally a battery minerals business, and Zimbabwe has probably the 3rd or the 4th highest occurrence of lithium ore bodies and resources certainly. And so Prospect Resources specifically went to Zimbabwe to be one of the first, shall we say, the first advancing investors in the twilight of the Mugabe era and the post-Mugabe era. We saw Zimbabwe really opening up to investment, and Prospect Resources was very focused and very strategic, and has, in its time exploring Zimbabwe, probably discovered the largest mineral discovery since independence from Great Britain. So you would say it's a very relevant project within the Zimbabwean context. It's the 7th largest hard rock deposit globally. And what sets us aside from the other hard rock deposits that we see, many of them are in Western Australia, but what sets us apart is we have a multitude of products. So we really fundamentally have 2 key products, and those are spodumene, which is a 6% lithium, and petalite, which is 4%. And what we've learned in the last year, doing tremendous work around Europe, particularly in Asia, is understanding the applications for ultra-low iron petalite. So this is the natural recovered product. It's a concentrate from our metallurgical process, and the occurrence of iron is really detrimental to the ongoing glass ceramics process. So what we found in our petalite is that there's substantial premiums given the ultra-low quality or ultra-low occurrence of iron. So this is a great opportunity for Prospect to have exposure to the glass ceramics industry, which is around 20% of lithium consumption, as well as the battery EV energy storage sector, which is roughly about 55 to 60%, but it's growing, and it's going to grow at a tremendous rate. So we're able to, you know, in a sense, we have a de-risked multi-product environment where there's a premium for the glass and ceramics industry and a large growing demand in the EV battery storage sector. So that's what sets aside. It's a very unique setting, geological setting. There's only a handful of petrolite producers, and as we've seen in the spodumene market, iron is going to become better understood, but it is already considered a waste or deleterious product within the concentrate. So we see ourselves as having a superior product, and certainly that exposure to the glass ceramics industry is tremendously exciting.
Okay, thank you very much. Good to know. But let's get a bit deeper, or delve a bit deeper. You just recently, or Prospect just recently, published a new feasibility study on the Arcadia-Projekt. Please tell us shortly the most salient facts. What is new? How did the metrics change compared to the earlier study?
Sure, no problem. Over the past year, the technical team, my team, have been very focused on improving our knowledge and understanding of the mineral recoveries of petrolite and spodumene. So there's new upgraded mineral recovery rates, and we see these as being more conservative than they used to be. So we're taking a more conservative view in light of the definitive study and the robustness and shall we say the rigor that goes into that. We'd want to have no potential risk of overestimating our mineral recovery. So that's been something we spent a lot of time on, particularly the variability testing, understanding how that recovery changes over the ore body. The second most substantial development over the year is qualification in the European glass ceramics market. So we've sent petrolite products to several major customers and have achieved qualification criteria from them, meaning on the basis of the samples they've received, which are routine metallurgical samples, we would be in a position to meet their qualification needs on a long-term offtake basis. So those are the two key aspects of the technical development over the last year, and understanding the premiums that these markets would pay for petrolite has helped us focus within the mine plan to ensure that petrolite is prioritized in the early years, to ensure that we were able to meet consistent and constant quality criteria demanded by these large glass ceramics customers. So we're very focused on that. We're what we'd describe as a customer-focused mining business, and we've been very clear that if there's a value and use premium, we're prepared to work hard to meet that. So we've taken premium pricing, we've taken conservative recoveries, and we've altered our mine plan and ultimately resulted in an upgrade in the ore reserve of 39%, which took the net present value to $710 million on a discounted value of 10%. So that's again a 39% increase in NPV, which has been a great result, a really strong reinforcement of the quality of the feasibility.
Certainly sounds so. I had a look at the numbers some time ago too. Internal rate of return went up quite substantially too, I think. So that was a big step forward. But there are a lot of steps to go still. So what are the next steps now? When do you think you will be able to make the final investment decision on this?
Yeah. Look, everything we've done in the last year has been in the interest of an accelerated funding and finance program. So attracting the right funding partner really relies on having the right balance sheet and the right business model. So one of the key outcomes of the feasibility study was bringing revenues forward into the debt-sensitive periods, which are the first 5 years. And in doing so, we've managed to more than, or just about double the EBITDA to $168 million per year for the first 5 years. So that's a really strong debt serviceability position, and puts us in a much stronger position in our negotiations and progression with our finance partners. So the next steps are really funding, and that was announced this morning that we've identified Afreximbank as the mandated lead arranger. They're very comfortable and familiar with Zimbabwean territory, and are a fantastic partner to the Prospect team. So
yeah,
we're looking forward to finalizing that.
Well, that's always the big hurdle. Once you've done all the studies, done all the drilling, financing, and the mining project. I saw that the market seemed to like the idea that you're working on that already with such a partner. Can you give us a bit more details? What is the amount you need to get the mine up and running, and how will your partner try to finance that?
Okay, look, it's certainly classic project finance, so debt and equity ratios that most industry investors would be familiar with, and the capital estimate at the moment is $162 million US. So we'd be looking to fund that out of a debt and equity split of approximately 65-35%, and Afreximbank are the mandated lead arranger for that funding program. We understand and have requested them to put in around 50% of that debt, around $75 million US. So that's a strong endorsement from them, and we believe that's a cornerstone investor that we understand will attract and de-risk the additional book that we need to build.
That certainly sounds like it. Now, you'd say the financing goes well, the build out of the infrastructure and plans and everything goes well. Where would you like to be with the project then, let's say in the next couple of years, 3 to 4 years, for example?
Look, I've got a fantastic management team, firstly, and they have the technical capability to take this project forward. We have an 18-month build program, but what we've considered as an additional de-risking step is to bring in EPCM partners that both have the experience within Zimbabwe or in Southern Africa, and certainly understand the size and scale of our operation and the equipment selection and choices we'll use for our processing. We've been in strong discussions over a number of years utilizing ADP Marine, which is a wholly owned subsidiary of Lycopodium Minerals. And so, we feel we have a strong partner there, able to build out the abilities and the execution plan. So 18 months is very reasonable, we believe, up to first production. And we would like to be early 2021, late 2021, early 2022 on the market, supplying ultra low iron pentallite to the glass ceramic sector, and attracting those premium pricing and meeting our offtake obligations with Sinomine, who currently have 42% of our offtake. So we feel that the timeline from funding, from first drawdown of the finance facility, is approximately 18 months, and we're very confident about that particular process. We've re-estimated the project spend over the last year, and it's actually gone down by $2 million US, $2 or $3 million US, which is a validation that we are within the degree of accuracy that you'd like and expect at this stage of the project. So we're
certainly true. If you look at a lot of projects, not only in mining, cost overrun or rising costs at least, is more the norm than bringing the cost down, even if it's only the estimates at this point in time. So very exciting prospects for prospect resources, let's say. Although, I mean, you've told us about the Patellite and that you're going into the glass and aiming to go into the glass and ceramics market there, but predominantly it's about EV, electrical vehicles, electromobility. Now, lithium prices have gone down quite a bit in the last 12 months or so. Is that a problem for prospect, or how do you think the lithium market will develop over the next 5 to 10 years, let's say?
But the market certainly affects us, and it affects sentiment and investor confidence. So we're not immune to that, and we understand that it's a complicated supply chain to take spodumene or hard rocks and brines through to batteries. But the fundamentals, and we believe the Europeans in particular understand the fundamentals better, which is that battery supply into the EV sector is constrained. So at the end of the supply chain, you've got long waiting lists for appropriate batteries with the appropriate technologies. So what we see is a consolidation within that supply chain, which enables the ramp up of spodumene or EV type battery quality products to be converted into appropriate battery storage systems and packs. So there's a consolidation that's undergoing. We see a sharp uptake in the EV consumption rate in the next 2 years, with EV parity to an internal combustion engine expected in 2021. So when we look at what the market commentators are saying about the EV sector in particular, we believe that the uptake of EVs is set to sharply increase in the 2020-2021 period, and we'll start to see the fundamentals settle down, and I think you'll see within that period shortages of raw materials, simply because there's been an inadequate entry to market in the 2018 and 2019 period for projects to meet the 2021 and 2022 demand requirements. So we feel quite excited about that. We obviously want to push for our own timelines to be ready for the 2021-2022 phase, and that's fundamental to us, leveraging and having good exposure to that high demand scenario. So we do understand that it's been tough on lithium producers. We do understand that the demands of customers are changing and specifications are getting tighter, and we're not surprised to see that, and we've anticipated that in our production decisions and equipment selection choices. And so in many ways we see the sharp uptake of the EV consumption in the 2021 period as being fundamental to a change in the trajectory of the lithium market.
Okay, that's certainly a good or interesting point of view. I've been talking to Ken Brinston of Pilbara Minerals a couple of years back, and he was saying essentially the same already then. I mean, projections have been going up and down depending on who you listen to, but longer term or in the next couple of years, a lot of industry experts, let's say, are of a very similar opinion as you just told us about. So
I think what really excites us is the setting of our project. So it's got a great ore body. It's a very near surface deposit. So our cost of production, which is largely got to do with mining the geology, is very low. So it's in the lowest cost quartile. And I think what we've seen in the last year is the higher cost producers with marginal cost of production around $500 being unviable and non-viable. So for us, the confidence that we have around estimations, both in capital and operating cost, point to our spodumene production cost being less than $300 per ton. And we see ourselves as being very competitive, even in the current scenario. So we do understand that it's come off a high of $1,000 a ton for spodumene, but our business model is not based on outrageous price forecasts in the future. We are very viable and highly profitable in the current situation. So we've had the opportunity to really perfect the energy usage and equipment selection for our production process, in so much that we can drive down our unit cost. So I think it's exciting to be a low-cost producer hitting the market at a time where there's going to be a swing in demand. And certainly feels like we've got the right opportunity here in front of us.
Okay. You know what? I was going to ask you to give me your personal opinion on why people should have a closer look at Prospect right now, at this moment in time. And I think you already answered that perfectly. So let me thank you for taking the time talking to us. It's certainly been educational, and I'm looking forward to see how it all goes in the future. Thank you very much.
Thank you. We'll keep you updated on how our funding discussions go, and we will obviously continually communicate with you and your markets, and look forward to chatting soon.